Today we're talking about pre-approvals. It's something that you need so you don't get sued or have to go find an emergency lender. This could cost you tens of thousands of dollars, so I'm going to interview mortgage broker Costa to make sure you get the right kind of pre-approval. So, Costa, thank you for joining me today. Please let us know, what exactly is a pre-approval?
To keep it very simple, a pre-approval is where the bank has given you the thumbs up that you're ready to purchase a property with minimal hiccups. So essentially, somebody's picking up your documentation and going through your income and your expenses to say, yep, we're ready to back you when you do end up signing that contract.
So I guess it's important to know if there are any hiccups that they're going to come up now where you're pre-approved rather than later when you've bought a property and it's stressful time. So how long does it take to get a pre-approval?
So pre-approvals, this is an interesting one. You can get a pre-approval within 24 hours sometimes, but the thing is, the banks are getting away with a cheeky, here's a computer-generated pre-approval that comes back instantly. So no one's actually looked through your documentation to ensure that you are ready to go to auction or ready to put through an offer. You might be wondering, what is a computer-generated pre-approval? All they're doing is checking your credit rating to ensure that there's no credit issues, but they're not actually checking your pay slips or your financials or your living expenses to ensure that there are no hiccups at crunch time when you've actually secured a contract. My preference for my clients is to get a fully assessed pre-approval, which means that somebody from the bank is picking up your information, checking everything is all good to go, so that when you do end up signing a contract, there's not going to be a whole heap of question marks. Hey, what's this expense? What is this, deduction on your payslip? All those questions have been answered. So that way it's just a matter of providing the bank with a fully executed contract.
So I've seen those computer-generated ones come back before. You press a submit button and 10 seconds later, the lender's given us the pre-approval letter. Based on what's been put in, nothing's been checked. So lenders with those fully verified pre-approvals are hot property at the moment. So to put that simply, so can a computer-generated pre-approval be knocked back when you go and buy?
Yeah, definitely. With a computer-generated pre-approval, it is conditional. They can definitely get knocked back, especially if something arises when they do end up looking through your documentation at the time that you have purchased a property. Look, even your fully assessed pre-approvals can run into some issues, but very unlikely. So that's why it's always good to run down the fully assessed process. And what is that process? That's a question that a lot of clients do ask me. It's literally just conducting your appointment, collecting the required documentation, and then submitting the application. Again, for a quickly generated pre-approval, does take, pretty much instantly. Whereas for a fully assessed pre-approval, it can take a few days. It just all depends on the bank. There are some lenders at the moment who are taking more than a month to assess their applications, to fully assess their applications, whereas others are only taking 2 to 3 days. So just keep an eye out for that and ask your broker or your banker, what is the turnaround time? How long is it going to take for somebody to give me a response back?
So I guess it comes down to your broker knowing which product is right for you, which type of pre-approval and turnaround times. And you touched on documentation before. What exactly does someone need to provide you to be able to get a pre-approval?
As of this point, you normally need identification such as driver's license and passport or Medicare card. If you're PAYG, so you work as an employee, you normally need 2 most recent payslips. Normally, looking at your transaction accounts, they normally want to see the most recent 30 days to see how your living expenses are tracking and ensuring that the wages are actually getting paid into an account. If you are self-employed, some banks are still accepting 2021 financials and 2020 financials, but we are probably a few, maybe even a month out from then definitely requiring your 2022 financials to be completed, just because there's such a massive gap from now to back 2021, mid-2021. Those documents are old. So they're definitely going to want to need some sort of comfort that you are tracking strongly. What else do we need? Probably just liability statements and also any other income, such as Centrelink or any child maintenance or anything like that.
So I'm glad you cleared up the misconception about self-employed people. A lot of people think it's harder for them to get finance, and most of them probably think they can't even get pre-approved. So is there anything that people who are looking to get pre-approved can do in advance to kind of help their application with the banks?
Yeah, definitely. I think one of the biggest ones is maintenance of your existing accounts. So making sure that it doesn't go into negative because it just shows poor management. Also, living expenses, making sure that there's no crazy purchases happening prior to submission. Look, banks are pretty good like that where you can mitigate certain living expenses. Like if there's one-off purchases, such as if you're buying a property and you've started to buy furniture from IKEA or from Kmart. So definitely things that you can say, look, this is uncommon, or this is a one-off, or this will cease moving forward, such as Netflix or Stan, for instance. What else can we look at? Well, definitely if you are in a permanent full-time position, we will need at least one payslip. For casually employed clients, you need at least 6 months worth of employment history. And then for your self-employed clients, again, if you can get your 2022 financials, that would be ideal, just in preparation for that meeting with your banker or broker. Other than that, just make sure your liabilities are also on track. Make sure you're making all your payments on time, because the bank will be able to see all your repayment history for, let's just say, the last couple of years on your credit report. So just be careful. The last thing I'm just going to add on that is the number of inquiries, such as credit cards or any personal loans or car loans. If you continue to make inquiries on your credit report, it will begin to reduce your score. So I've seen clients who have only taken out, 3 or 4 credit cards, all paid on time, but because they're trying to chase the Qantas points or, trying to get some reward points from each of those credit cards, well, because of those, 4 or 5 inquiries over the last 6 months has affected them quite a bit. So just be careful with that.
I guess that's the beauty of a fully verified pre-approval. We can actually pick up the phone and speak to the credit assessor from that lender and explain to them, hey, living expenses were higher for this particular month for this reason. There's a reason behind it. Whereas if that's not available, then it is a bit harder when you can't get a fully verified pre-approval. What people want to know is, how long does the pre-approval last for?
Look, this one's a hot topic. A lot of clients do ask this question. Your pre-approval lasts for 3 months, okay? But just to keep it very simple, some banks guarantee that loan amount that you've been pre-approved at. Some banks don't. And if there are any rate increases, which is definitely happening in the current market, your loan amount with that bank that doesn't lock in that loan amount will reduce every time there is a rate increase. So be very careful with that. So for instance, if I ended up getting a pre-approval for $500,000 for $500,000, and within that 3 months of my pre-approval, there were 2 rate increases. Well, if you were with a bank that actually doesn't lock in your loan amount, your loan amount has technically decreased by, let's just say, rule of thumb, 5%. So you may not actually be able to get that $500,000 when you secure that contract. It may have dropped. And that's where you will have to cover the difference with cash. So definitely call up your broker or banker and just double check, hey, is my loan amount locked in for the 3 months or is it not? So 5% of $500,000 means that you've got to come up with an extra $25,000, and not many people have that just laying around conveniently. So double check that with your lender provider.
Wow, that's good to know. Now, what happens if I don't find a property in those 3 months? What happens to my pre-approval?
So after that 3-month period, you can request an extension for another 3 months. And that's, make sure you obviously do that just before that 3-month period is up, and you can renew your pre-approval just to have that confidence all over again.
Is there any danger of, if I'm not competitive and I can't find a property, to keep renewing it every 3 months? Is that a problem?
I think when the banks can see that there are inquiries on your credit file that you're applying for a home loan, at least they can see that you're applying for a home loan to purchase an asset. If they see multiple inquiries for a credit card or personal loans, then that's a bit of a red flag. But if they can genuinely see that you are renewing your pre-approval, every 3 to 6 months, well, then you should be able to put some commentary around that and provide, and just clearly make it known that you are hunting for a property. So I don't think there's anything wrong with extending.
So if I've got a pre-approval, is that it? Do I definitely have a loan, or are there any conditions that come with it that I got to watch out for?
So with any pre-approval, there's always going to be conditions on there. The loan amount that they've approved you at is never guaranteed. With a pre-approval, it gives you the confidence, and it is highly unlikely that issues will arise when the time does come if it is a fully assessed pre-approval. But the conditions on there will always be subject to a valuation. So whether you're going to go to auction or whether you're putting in, putting a clause on a purchase contract, when you're converting your pre-approval to a formal approval, so when you've actually locked in a contract, the bank needs to do a valuation. So there's always going to be risk no matter what with a pre-approval, because if that valuation comes in less, then that's where you might actually have to cover the difference with cash. In my own experience, over the last, let's just say, 4 or 5 years, I actually haven't seen a valuation, touch wood, come back less than what that contract to sale price is. But I have had instances where a couple of unit purchases or townhouse purchases have come back in lower. So that's why it's always good. Just be careful that you do end up putting in a finance clause or a building and pest clause in your purchase contract. Or if you're going to auction, just be careful that you've done your research prior and there's no issues at all with the property. Because once you've bought at auction, it's done. You've purchased a property, and if you try to pull out, then you will lose your deposit.
And how about the rates that you say when we get the pre-approval? Are they still valid when the time comes to buy?
So good question. So whenever you do a pre-approval, no rates are locked in. So the fixed rate or the variable rate are subject to change. The only time you technically lock in a fixed rate is at the time that you've purchased and you've got a contract to sale. But you've got to make sure that you have to pay a rate lock fee for a fixed loan to secure that interest rate. Whereas with variable, it is subject to change. So you can't actually lock in that interest rate. What are clients sort of doing at the moment where they're going down the path of, fixed and variable? Well, look, last year, only a handful of clients were actually fixing in. Whereas the year before that and the year before that, pretty much all my clients were fixing in because the rate was so cheap at 1.99. Now, moving into this year, it's been a combination of fixed and variable. Look, the way that I've sort of put it is because I don't have a crystal ball, whether to fix in or to leave it all variable. But what I can say is if you want that certainty of repayments, if you're telling me, hey, I've actually got, I'm stressed out, I've got anxiety, I'm worried about, meeting my repayments, then in that case, maybe you should fix it in at X rate, just so you know exactly what your repayments will be for that fixed period. You should even ask yourself, hey, if I lock in at, let's just say 6% and the variable rate is at 5% and it never passes my fix where I can make a win, let's just say it does a little loop and comes back down. If you can say, I actually won't get upset if that variable rate never exceeds my fix because at least I'm not stressing out every month the RBA is making an announcement, then maybe you should look at fixing in. I think that at least gives you some comfort so it can help with budgeting. I'm finding that a lot more first home buyers are looking to do, a hybrid loan, a combination of both fixed and variable. So locking in a big chunk of the loan just for repayment certainty and variable just to allow them to pay off faster.
So what I really think is the keywords there is if certainty of repayments is important to you, then get that fixed rate. Like you said, if you're going to be stressed every first Tuesday of every month when the RBA makes an announcement, fixing is the way to go. With that hybrid as well, having a small variable portion, being able to use the facilities there to pay off your loan faster. So pre-approvals, they sound amazing. How would you like to wrap this up, Costa?
Look, you're at a massive advantage if you are pre-approved. The real estate agents will take you more seriously and so will the sellers. You'll be in a much better position to be able to secure that dream home. And if you're curious to find out what happens after pre-approval, click this link. We'll run through what a contract to sale looks like, what an expression of interest looks like. Even if you're not a first home buyer, it's good to get yourself familiar again so you know how to complete the perfect offer for a property.